topic or the questions?
No doubt, sir.
Okay. Okay. So we have discussed about comparative balance sheet in our previous class. Before that, we have not done anything. Okay. So today we are going to cover the comparative statement of profit and loss. I will solve one question so that if there is any confusion, you can ask here and then you will solve your homework. So 26. Okay, so this is the question. If you're able to see this, please tell me the question. Can you see the question? Okay,
Yes.
so there is uh, some question they have given the format properly, but there are some question where there is no format. They have just given a list of item. So I will solve a question with list of item only because format is, if it is given, then it is very easy to solve. So I will take question number 20. This one. Okay, question number 16 I'm solving. There are 2-3 percentages here. So question number 16. First, the format. Then there is no number. Okay, so comparative, the statement of profit and loss. For the year ended, the latest date is 31st March 2020. Particular, then note number, amount, and here it is change. In amount, there will be 2019-20, 2018-19. Change, absolute change, and percentage change. So the first item is revenue from operation. Revenue from operation, it is given in percentage of cost of material consumed. So there is only one income. We will write total revenue. Then there is third expenses side. So in expenses, it is cost of material consumed. And then there is other expenses. Amount of cost of material consumed is only given 13,44,000 and 6 lakh. So 13,44,000 and 6 lakh. And after that, all the amounts are in percentage form. So it will be total expenses. Then there will be profit before tax. Then tax and profit after tax. So first of all, we have to calculate revenue from operation. In this year, it is 125% of 13,44,000. So 13,44,000 into 125 divided by 100. However, in previous year, it is 6 lakh into 200 divided by 100. So it is 12 lakh, and here it is 13,44,000 into 125%. 16,80,000. Just 1 minute. Okay, so revenue from operation, we have 16,80,000 and 12 lakh. So 16,80,000 and 12 lakh. Then total revenue will be same. 16,80,000 and 12 lakh. After that, it is expenses. Other expenses we need to calculate. Other expenses is 10% in both the year. So other expenses 13 lakh, 10% of operating revenue. Sorry, not 13 lakh 40,000. 10% of operating revenue. So it is 16 lakh 80,000 into 10%. It will be 1,68,000 here, and 12 lakh into 10%. It is 1,20,000. 168 and 120. So total expenses it is 14, 15 lakh 12,000. Here it is 7 lakh 20,000. Sorry. I have written the wrong amount. 1,68,000 here and 120. Total is 15,12,000 and here it is 7,20,000. Then the profit before tax. Profit before tax will be second minus third. Second is total revenue and total expenses is 4. So 16,80,000 minus 15,12,000, it will be 1,68,000. And here it will be 4,80,000. Now, tax is 50% in both the year. So tax 1,68,000 into 50% and 480 into 50%. So it will be 2,40,000 and here it will be 84,000. So 84,000 and 2,40,000. So the balance is 84 and 240. Now, after completing this, we will start our absolute change. So 4,80,000 in revenue, 4,80,000 in total. Then there is 7,44,000, 48,000. It will be 7,92,000. Yes. 160, now it is negative. So 168 minus 480. 168 minus 480, it will be 3,12,000 negative. Then 240 minus 84, it will be 1,56,000 negative. And again here 1,56,000 negative. Now the percentage. So percentage of the first item is 40%, 40%. So it will be 100. $124. Then this is again 40%. Here it will be 10, 110%. This is 65%. And then this is, it is also 65% and 65%. But All three here is negative. Okay, so this is our solution of revenue of a statement of profit and loss. Okay, so do you have any doubt in this one? Let me explain one more time actually. So first, revenue from operation is given here, 16 lakh 80,000, 12 lakh. We have calculated this because it is given as percentage. So there is 200% increase in like cost of material consumed, and there is 125%. So this is 16 lakh 80,000, and in 2018-19 it is 12 lakh. After this, revenue cost of material consumed is given 13 lakh 44,000, 6 lakh. Now you can see here that there is a problem, that revenue increased by 40% only, and cost of material consumed by 120%. This is why your profit and loss decreased. Profit before tax, tax, and profit after tax decreases. So that's why the answer is negative. The percentage 65% decrease in profit. There is increase in sale. You can see 40% increase in sales, but then also we are in loss. So this is 125.4%, then again 40%. Other expenses we have also calculated. It is 10% of revenue from operation. 10%. 12 lakh, 10% 120, 16 lakh 80,000, 10% 168. Total expenses we have calculated by adding this. Profit before tax. Tax rate is 50%. 50% of profit before tax. So 84,000, 2 lakh 40,000. Profit after tax is same. So this is absolute change, current year minus previous year, and then percentage change, absolute change divided by previous year amount. And this is how we have to calculate. You want to copy this or want to solve a new question? Leave the question you can solve at home. Just if you want to copy this, copy. Otherwise, we will discuss common size statement. You want to
Sir, we
copy?
will copy.
Yes. Okay. Hello, Maria, Sumaya. Actually, you joined. I didn't see. Is there any problem with your mic, Sumaya? Your voice is not coming actually from previous 1-2 classes. Not audible. Please tell me after you have completed this.
Sir, we can move on to the next question.
You have completed this?
Yes.
Okay. This working also?
Yes.
Okay. Okay. So move on to the next question. We are going to discuss a new topic, common size statement. Okay. So this is common size statement. First of all, like why we prepare common size statement, it is important to know. So let's say that in 2020 and 2021, sale is 5 lakh and here it is 10 lakh. And again, cost of material consumed. Here it is 2 lakh and here it is 5 lakh. Okay, so let's convert this in percentage form. Actually, common size statement is a vertical analysis. First of all, it is a vertical analysis, means it compare the same year data. Okay, there is one base item and we compare all the other data with this base item. Like in statement of profit and loss, base item is revenue from operation. In balance sheet, the base item, the common item is total of balance sheet. So we need to compare all other items. We need to convert all other items into percentage on the basis of these two base items. Okay, so in the statement of profit and loss, your base item is this. It means on the basis of this, we have to convert into the percentage all other items. So it is 100% because 5 lakh divided by 5 lakh. The formula of converting the common size percentage calculation is individual item into 100 divided by base item. So you have to take any individual item of that year, divide it by the base item into 100. So this is how we will convert every item into percentage. So now in this year, 2 lakh divided by 5 lakh into 100, it will be 40%. Now in this year, 2021, again, it is 100% and it is 50%. Now, by seeing this, what do you think? What happened here? Is this good for the company or bad? You have 4 information: sale of 2 years and cost of material consumed of 2 years. We have converted all these into percentage and now you have the information. Okay, so you tell me that what it seems. Is it good for the company or bad? Anyone who want to say something? I will
It's good
explain.
for the company
Okay, it's good for the company. Can you tell me why?
because it's comparing both the past year and the current year.
Okay,
And you can see an increase in 2021.
so that is good.
Yes. No. No, that's not good for the company.
Okay. Anyone else? Sumaya, actually, your audio is not working. Sorry. Madiha, what do you think?
I don't know.
Shaduk?
Don't know, sir.
Okay. So the thing is, it is not good for the company. You can see the sale is increasing. Okay. Sale increased by, actually, you can say it is twofold, two times than 2020 sales for 100% increase. But your cost of material consumed is 40% of sale in the previous year, but now it is 50% of sales. So here we have 60% saving as profit, you can say, for other expenses to manage to pay all other expenses. But now in 2021, we have only left with 50% to pay all other expenses. So there is an increase of 25% in cost of material consumed in comparison to 1 year data. So for this purpose, it should be 40%, it should be 4 lakh. 5 lakh become 10 lakh, so 2 lakh should be 4 lakh, because material consumed is a direct expenses. It is proportionate to the sale always. Okay, so your sale increase, your cost of material consumed increase proportionately. So if it is like 100% increase, so in the cost of material consumed there should be 100% increase, so it should be 4 lakh. But what is happening? It is increased by not 100%, it is increased by 150%. So if your cost is increasing more than what we are expecting, then it is not good for the company. So this is what common size statement tell us. So this is important because you compare all other information with sales. Okay, so in comparison to sale, how much your cost is increasing or decreasing, it will tell you. And you will know if there is any, obviously, like unexpected increase in any expenses. In that case, you want to control the expenses. Okay. Now the question is, why we need to control the cost? Because cost controlling is very important. Cost cutting, you can say, is very important in competitive market. In competitive market, let's say your cost of one product is 150 rupees and you want to earn 50 rupees profit. So it means you will sell your product at 200. So this is normal situation where there is no like tough competition. But if in the like market there are many players like you, all of them have the same product, there is no like quality change or anything else, same product. So if they are selling the product at 180 and you are selling it at 200, then no one will purchase your product. So in competitive market, you have to price your product according to market, not according to your expected or like expectation. So in this case, either you have to settle with 30 rupee profit only. 150 is cost and 30 rupees profit. You have to settle for this only. You cannot earn 50 rupees because this is a competitive market and you have to price your product at the same label. So 180 should be your sale price. Okay. So there is no control on sale price. So on which items you have control? Cost. If you find a way to reduce your cost, then again you can earn 50 rupees profit. Maybe you can reduce your cost to 130, and in 180 also you can earn 50 rupees profit. So that is why controlling the cost is very important, and this analysis on the basis of common size statement is very important in such type of like decision making. So now common size statement definition. This is common size statement is a statement which show the relationship of every item with a common or base item in a year. It is type of vertical analysis. This is very simple definition. You can easily remember this. Now, the second part is objective. What is the objective of this common size statement? So first is to analyze the change in individual item, to study the trend in different item, like how it is going in different years. So about trend. Actually, trend we have discussed in comparative statement also. To show the trend, comparative statement is better than this common size statement because it show you the data of different years. So that's why it is better to use comparative statement for trend, like trend percentage or trend calculation. To analyze the change in individual item, yes, I told you just that how to analyze the individual item on the basis of base item. So every year you have to check that your individual item is not increasing by too much value, and if there is any change, then you can find the reason why there is heavy change, there is high change in the value of any individual item. Next is third number is to assess the efficiency. Obviously, there are different items, different departments in the company, and all of them are working like as per their quality, as per their knowledge. So there are different efficiency level in different departments. So you have to check that which department is not working at full efficiency. Not full, actually, no one can work at full efficiency, but yes, 80-90% efficiency should be there. So if someone is like working at 50% efficiency, some department, so in that case, you have to like improve these things to assess the efficiency. So next is to ascertain the change in capital structure. Actually, efficiency, the previous item, we have depreciation, amortization, we have employee benefit expenses, we have like other expenses, and then the cost of material consumed, purchase of stock in trade. If we discuss all these things, if we calculate the percentage of all these things, then there will be human resource department, there will be accountancy department, there will be production department, and then there is like cash management of the business. So it will tell you about efficiency of all the branches. Next is to ascertain the change in capital structure. Now we have moved to balance sheet. In balance sheet, can anyone know what is capital structure? Can you tell me? No? Okay. So capital structure means like long-term capital of business, long-term capital employed. So capital employed also includes non-current liabilities. So what are the different sources? It may be equity shares, preference shares, loan from bank, then debenture. So in your long-term capital employed, what is the percentage of different sources? That is called capital structure. Okay. So these two are shareholders fund, these two are long-term borrowing. So we calculate it like this: equity share, preference share, loan, and debenture. Now, if we are comparing all these, on the basis of total of balance sheet, because in balance sheet the common item is total of balance sheet. So we are comparing equity, we are comparing preference share, we are comparing long-term borrowing, loan, debenture. So we are comparing every item with total of balance sheet. If there is any change in percentage of any item, then it means there is some change in capital structure. I'm not talking about current liabilities here because that is part of working capital, not long-term capital employed. So current liability, there will be a point, yes, to assess the liquidity position. Yes, both of these. So if there is any change in percentage in shareholders fund, non-current liabilities, then there is change in capital structure. And if there is any change in current asset, current liabilities, then it means change in liquidity position. And we can analyze the liquidity position of the company on the basis of this. Okay, so if your current asset is sufficient to pay your current liabilities, then you are in a good position. So for that, there is a ratio chapter where we discuss two types of ratio. One is called current ratio and the second is called liquid ratio. So these two ratio is also indicator of your liquidity position. It is bad or good. So here also we can find out about this and in ratio, because the ratio is also part of tools of analysis. So this is the objective of common size statement. Please write this. Done?
Yes.
Okay. After this, there is a format of common size statement. It is also same or same as comparative statement, but name of column will change. Now, in common size statement, you don't need always 2 years data. In comparative statement, we have to compare with 1 year with uh, 1 year with another year. That's why we need 2 years data. But in common size statement, we are comparing only 1 year data, different items on the basis of sales. In the statement of profit and loss, and in balance sheet, it is total of balance sheet. So if 1 year data is also given, that is fine. We can solve the question on the basis of that. But if 2 year data is given, then you have to calculate the common size percentage of 2 years. So common size percentage. Year, like current year, previous year. If year is given, then you should write the year, not current year, previous. Note number, and then this is particular. So this is common size, either balance sheet or statement of profit and loss. Now, base item. So base item, the statement of profit and loss. It is revenue from operation. And in balance sheet, it is total of balance sheet. Total of balance sheet. Now, how to calculate common size percentage? So common size percentage equals to individual item divided by base item into 100. So you have to convert the base item also in percentage. Okay, like revenue from operation is base item, so it will be 100% always. So you have to convert that also. Please write this format. Done?
Yes.
Everyone? Madiha, have you completed?
Yes, sir.
Okay. So if all of you have completed, then tell me if you have any question in this common size statement. Actually, any of you have solved some question of comparative statement, the homework that was given? Please say something.
Yes, sir, I have.
Okay, you have uploaded.
But in that, it's written common size.
Okay. So,
So I submitted common size.
but I'm not seeing any solution. If you have submitted, it should be here. No, there is no homework uploaded.
I'll check.
Okay, please check. So, Shahrukh, you have not solved question. Please try to solve question of comparative and common size both. Okay. Sorry, not common size. Common size is not completed yet. So we will solve question of common size. Until then, please try to solve the question of previous class, the comparative statement. Madhya, please try some question, and
Okay.
Soya also. And please upload it, because unless you upload the solution, how can I know that you have solved question correct? So please upload sometimes so that I can see your solutions. Okay.